Ravi sir,
Hello, Rajesh sir.
can we start?
Yeah, we can start, sir.
Yeah. So, good morning, everyone. We are here on second day of GST series of real estate sector. So, today we have with us Ravi, Kumar, Somani sir, and our Vice Chairman Rajesh Agarwal sir. I would like to ask Rajesh Agarwal sir to give opening remarks. Over to you, Rajesh sir.
Thanks, Ishwar. I welcome you all, friends. I welcome Ravi Kumar sir, and I really thank from my side for helping me to structure this beautiful series on real estate. He's always helped with respect to the GST for members and Pune branch definitely. The idea behind this structuring, that is revenue side of GST, real estate, expense side of real estate, and the structuring of real estate is totally of Ravi Somani sir. I thank Ravi sir for helping me to structure this program, giving your valuable time. And friends, with respect to the real estate and today's session, today is really we can say the complex part of compliance with respect to the real estate is also lying with expense side. Many compliances including reverse charge mechanism, how to compute 80%. These all are covered in expense side of the profit and loss account. So I really thank Ravi sir for structuring such a beautiful series. Ishwar, over to you, please.
Yes. Thank you very much, Rajesh sir. So, GST is always interesting matter for Rajesh sir also, and Ravi sir is expert only in that thing. So, and for this beautiful, interesting and very complicated sector, real estate sector, we have today we have with us the great Ravi Kumar Somani sir, who can guide us through all problems we are facing, and we can ask them queries after the session. I will just introduce Ravi sir briefly. Everyone knows him, but still I will introduce him briefly. He is qualified chartered accountant. Also, he is pursuing LLB right now. He is extremely passionate about GST with professional experience performing health check reviews, providing advisory and litigation support in matters concerning indirect taxes. He has given lectures at various trades professional forums such as ICI, MCCI, CII, BCAC, WMTPA. He has authorized three books, Practical Guide to GST on Automobile Industry, published by Tax Sutra, Practical Guide on GST and Certificate, published by Bloomsbury recently. Fifth edition of this book was released. And also he has published Self-Study Guide to Indirect Taxes, published by Asia Law House. He has written various analytical and issue-based articles, research papers, and legal updates on indirect tax matters, which are published in various newsletters and online platforms. He loves doing extensive research on subject and solving critical indirect tax problems. His mission is to spread indirect tax knowledge, solve indirect tax problem, and raise voice against this practice. So I would like to ask Ravi sir to start his session, because everyone is eagerly waiting to have his word of wisdom. Over to you, Ravi sir. Thank you.
Yeah, thank you very much, Ishwarji, for that nice introduction. I'm certainly, I will not say great. We all are learning, and it's a continuous process. It's been almost 5 years since GST is implemented, and even today, I have so many things which I need to cover, which I don't know much about the subject. So, and I think phenomenal, encouragement shown by the participants. I can see almost 100 participants being there today here. So,
Ravi sir,
yes,
here
sir.
we have with us Nilima Nagarkar madam, Deputy Commissioner from State GST Department. I welcome madam.
Thank you, sir.
Hello, Nilima madam.
Hello, good morning.
Good morning. Good morning. We welcome you here.
Thank you.
So today we would get the holistic view, I would say, departmental view as well, for the benefit of participants. So welcome, Nilima ma'am. So now coming to today's topic, which is GST on expenses for real estate. So real estate, as we all know that, all other sectors go in one direction and real estate go in totally different direction. And GST law requires special rules, special procedures, special provisions to deal with the challenges that are there in the real estate sector. So today's topic, we would be focusing on the expense side. We will look at what are the critical issues that are there in this expenditure side under real estate. More specifically, from reverse charge, I understand a lot of challenges being faced by the businesses. Especially, we have seen that multiple changes that has happened in the law right from the time the GST got implemented. So before I begin, I would just like to check with Ishwarji. Just sir, confirm if my voice is properly audible and
Yes, sir. Yes, sir. Perfect.
visible.
Yes,
Yeah,
sir. Yes, sir. Perfect.
All perfect, Ravi.
Yes, sir.
Done. Great. So, as I mentioned, GST implications on expenses. This is what we will be covering today. We will start right from July 2017, because now we see that a lot of departmental audits, scrutinies have started. So as a businessman, as a professionals, we must be knowing what is the law and how do we really comply with it. So right from transitional provisions, there are still a lot of transitional issues being faced by the businesses. Then we will look at what was the concept of eligibility of credits as far as expenses is concerned prior to April 2019 and after April 2019, because there was a change in the law. And in the course of that, there was a transition from the old scheme to the new scheme by filing Annexure 1 and Annexure 2. That is also something we'll dive into it. Reversal of ITC has been one of the most complex aspect of this entire real estate transaction. So that is also something we need to discuss. In fact, three aspects: pre-GST, pre-2019 and post-2019. Again, within that, there will be multiple variations of commercial projects, revenue projects, area sharing, revenue sharing. Then we also look at reverse charge on certain expenses, government expenses, more specifically TDR, FSI, JDA. I'm not going to cover too much of the entire JDA aspect because that is the session tomorrow, but I'll touch upon something that is important from expenditure perspective. Then yes, this 80-20 rule, which is, has its own complexities, and then what should be the input tax credit on the leasehold projects, because that is one of the very big industry issue today. So with this coverage, let's get going for the today's topic. So anyone have any questions or anything, you can please put it in the chat box or in the Q&A. We will cover them in the end. So if you see this expenditure list on the screen, these are, I would say, the major expenses in any typical builder industry. When we are talking about builder in today's discussion, it is more on the residential and the commercial apartments rather than the infrastructural projects or the plotting aspect. Land being one of the biggest expenditure, it can actually go about even 50% of the total expenditure cost of the builder can actually go about for the land, if not more. More specifically in regions like Bombay, plus I think some pockets in Pune and other urban cities, you go to NCR. So the land cost is one of the substantial costs in the entire expenditure list for the builder. Again, depends on project to project, what sort of a project it is. For example, in a villa project, I would say typically 60 to 70% cost would be that of a land. On other hand, in the affordable housing project, it could be a bit lesser. But then very recently, we all know that there has been a judgment by a Gujarat High Court on this 1/3 land deduction. I think it's a very, very, very well said, very valid judgment by the Gujarat High Court. And this is exactly what we estimated that this would happen, I would say, right when the GST was getting implemented. We all know that there is already a judgment under customs, which has come right in 2016, that there cannot be a standard deduction without giving an opportunity to allow the actual deduction. So what has been asked in the Gujarat High Court, if we really look at that judgment, what is asked is not that this 1/3 land deduction is unconstitutional or illegal. What is asked, you keep 1/3, but you also give assessee an opportunity to claim the actual deduction if he has the details of actual deduction. That is precisely is an plea that has been made before the Gujarat High Court, and High Court has affirmed the view, relying on Wipro Limited, another Supreme Court judgment in the context of that 1% loading unloading charges which was levied under customs. So important question that comes is that now that this judgment has come, obviously we all need to also wait for the Supreme Court judgment to really give a final go ahead for this entire thing. In fact, this is how the law was there under service tax. There was always an opportunity to give a standard deduction. But the important point is, abhi ye judgment aa gaya hai. Now, what is the way forward? What next? What is that we need to do? What is that we need to advise to the clients? What is that businesses need to do now? See, one very important aspect is that of late, it has been seen that businesses are actually taking the cost of GST in the construction sector, because after 1st April 2019, no consumer wants to pay GST beyond 5%. Even if the tax rate or effective tax rate is 12%, customer does not want to pay more than 5% for a simple reason being that in the next project, he is charging 5%. Why are you charging 12%? Simple. And it can be make or break of a deal. And precisely, builders are paying about 7% out of their pocket. Now, if the tax is being paid out of pocket, it clearly leads to a scenario where there is no unjust enrichment, wherein the builder has not passed on the taxation benefit on the end consumer. Now, in those cases, wherever the cost of taxes, either partially or fully, is borne by builders. In fact, I see so many hoardings where the entire cost is also borne by builders to attract the customers. I see so many hoardings where say that no GST applicable. GST is waived off. So in those scenarios, one very important aspect that can be looked at is claiming refund on the excess tax paid on the land deduction, which is beyond 1/3 of the value. Now, let me tell you, there would be an argument by few saying that no, we need to wait for the Supreme Court to give the final judgment. Let me tell you, you can wait for the Supreme Court to give the final judgment, but the point is that there is a time limit under the law to claim refund. And there is already a settled jurisprudence in the case of Mafatlal that time limit has to be followed. You cannot say that somebody else will fight the judgment and get the favorable order in Supreme Court, and after 5 years, we all will file a refund application and get this money refunded. Absolutely no. If you have to claim refund of taxes, you have to fight your own battle. This is exactly what Supreme Court has mentioned in the context of Mafatlal Industries landmark judgment in the context of refunds. So the point is, in all cases, when the builders have actually taken the cost of taxes and there is no unjust enrichment, there is a clear possibility that is seen of actually claiming refund of the excess tax paid beyond 1/3. Obviously, the refund would be, if allowed, would be subject to whatever the judgment that the Supreme Court gives. But if the judgment of the Supreme Court is favorable, then I think it would greatly and largely benefit the entire industry. And I don't see any harm in filing an application for refund, because when I read this judgment, in fact, the entire copy of judgment is in front of me. When I read this judgment, I am more than convinced that the view given by the High Court is legal and proper. Something that is not within the purview of GST directly cannot be taxed indirectly. These are fundamental principles of interpretation, I would say. Apart from land, various other expenses are incurred. Another very important expenditure list is this government permissions and approvals. At the initial phase of the project, builders would incur phenomenal expenses on getting this PMC, PCMC approvals, registrations, authorities, sanctions, licenses. One important question is, what is the implication of reverse charge on those expenses? I'll come to it in the course of this presentation. Then architectural design, consulting, construction equipment, machine, site preparation, excavation work at the start of, when the hardcore construction, completion, finishing, manpower is one of the biggest costs, and a host of direct, indirect expenses. I would say marketing and promotion is also one of the very, very big expenditure in the builder's P&L. So in today's topic, we will look at these expenses, and in the various, in our coverage, we'll try to cover majority of these expenses wherever there are issues. Where there is no issue, I would not be taking up those aspects unless there are specific queries coming in. Now, for the hardcore construction expenses, when we really go about it, after the rate rationalization that has happened, so this is the rate that is there. Majority of the goods in the builders industry are taxable at the rate of 18%. Cement continues to be 28%, and sand, sand goes under 5%. There are some products, I would say, that go under 5% and 12% also. But the substantial, I would say 90% of the products, except if I remove cement, actually is under the category of 18%. Now, this is fine. There is no problem with this 18% taxation. But the entire issue is that you have blocked the input tax credit of this entire 18%. So that is one very big issue as far as the expenditure is concerned, because an average rate of tax that on the expenditures of the builder would eventually go to 18%. In my view, if we remove cement, 95% of the expenditures would be under 18% category. In the residential segment, today this entire 18% is blocked. If you ask me what is the reason of blocking this credit, why in the builders industry the input tax credit is denied, I would give you an answer that it is about the perception management. When an individual goes and purchases the home, he sees, okay, flat is 1 crore and 12 lakhs is GST, 12% is GST, 12 lakhs is GST. Oh my God, government is charging 12 lakhs is GST, and government is looting the taxpayers. So that is what the perception of an individual comes. So what government very smartly they have done, they have made it 5%. Now, the innocent taxpayer, he doesn't know that the 5% is after denying the input tax credit. Now, the same taxpayer, when he goes for booking a flat, he will see instead of 1 crore, the builder will increase the price to 1 crore 10 lakhs. On 1 crore 10 lakhs, the GST of 5%, he is happy. Oh, I am giving something, not a very big amount as GST, 5 lakhs.
Ravi sir.
Yes, Rajesh sir.
Actually, they have pictured like this, कि builders or developers are not passing the input tax credit to the customer, and there is a huge anti profiteering out of this input tax credit. Just to pass this input tax credit to the ultimate customer, this composition scheme came in picture.
This is only picturized, Rajesh sir. As you rightly mentioned, this is only picturized. I'll give you one very live example. Just yesterday, we got a case wherein on similar issue is there in the restaurant industry. Again, same perception management. When GST got implemented, there were a lot of posts on WhatsApp and Twitter that when I went to eat in restaurant, I ate with my friend along with Modi ji, because 18% is what I am paying to the government. So to plug this negative perception among the individuals, they have smartly removed the ITC and reduced the rate to 5%. On the face of invoice, nobody feels the pinch of paying the tax. But do you really think this is correct from the industry perspective? Just yesterday, we got a case from Association of Hotel Industry from Mumbai. They want us to represent before the government and actually ask the government to allow the input tax credit for the hotel industry, which means that hotels themselves have analyzed and assessed that this is not right for the industry, and who else can really talk about industry better than the associations dealing in the industrial associations. So while from a political perspective, this is a very good camouflage, but from a business perspective, I think denying input tax credit is not a good trend that is being set. It leads to a lot of issues. And I'm sure today, if you ask my clients, the clients with whom we deal in real estate, none of them is happy. At least my clients, none of them are happy with this scheme of denying input tax credit and going ahead with this new rate. Everybody is even today seeking opportunity. Can they say this is an ongoing project and can I go for the old scheme? Because input tax credit is the heart and soul of GST. Now coming to the past, the various expenses, how it was in the past. In the past, majority of the expenses of the builders were not allowed as credit. For example, input and input services on excise duty was not allowed. VAT, if you're under composition scheme, there was no question of credit. Swachh Bharat says stamp duty, purchase tax, entry tax, all those things were not there. What was allowed was service tax, including Krishi Kalyan cess, and excise duty on the capital goods. This was precisely the problem in the old regime, and the entire intention of bringing GST was to plug this problem and allow the seamless flow of credit with no cascading, which was also followed when the GST was implemented. Very unfortunately that in 1st April, again, this entire thing has been rolled back for the residential segment. Now, question is, what happens to the flood of anti-profiteering notices that were issued against the taxpayer when you have allowed the set-off? You have put up a claim that the assessee is not passing on the benefit. Hence, there is an anti-profiteering, and today lakhs of crores of demands of notices are pending before high courts on the anti-profiteering issue, more specifically for the builders. And I'll tell you, one of the first notices in respect of this anti-profiteering came against a builder only in Delhi. So what happens to that? Now that after 1st April, all that thing is gone, does that mean the old cases of anti-profiteering still continues? So that is something we need to wait and watch, because the anti-profiteering hearings are also somehow getting postponed in the high courts time and again. Now coming to the transitional credits. First and foremost, whatever is the credit that was lying in the erstwhile service tax returns was allowed to be transferred in the Tran 1 by way of filing Tran 1, allowed as electronic, as input tax credit in the electronic credit ledger. Similarly, capital goods also, if the assessee has taken 50% credit, they could transfer the balance 50% credit. One litigation, what is being seen here is that if the assessee has not taken even 50%, actually speaking, if we read section 140 subsection 2, the balance 50% would still be eligible. The entire 100% could also be directly taken through Tran 1. But unfortunately, department is claiming that what is eligible is only the 50%. And if you have missed taking the 50% in the earlier regime, you cannot transfer balance 50% again. All that would be eligible is only 50%. I would say it is a frivolous litigation, would not go anywhere but in favor of a taxpayer. So that is one issue which is being faced. Another fundamental issue is in the context of carry forward of education cess, secondary higher education cess, and Krishi Kalyan cess. Now, when GST law was getting implemented, there was zero doubt. That why this education cess, secondary higher education cess, or Krishi Kalyan cess should not be allowed to be transferred, because the way the provisions were drafted, the explanation to section 140 was very clear to also cover all these cesses. And very rightly, assessees have transferred education cess into the GST regime. It's very unfortunate that retrospective amendment has taken place in the law effective 1st of February 2019, wherein retrospectively this education cess and secondary higher education cess and Krishi Kalyan cess was denied to the entire industry, including builders industry. Personally, I'm not in favor of these retrospective amendments. Now the important question comes, okay, we cannot transfer the education cess to GST, but why we cannot claim refund of the education cess, secondary higher education cess, or Krishi Kalyan cess lying as a closing balance in the erstwhile tax regimes? Let me tell you, one of the first refund applications was filed from our Bangalore office, and we got a favorable order from tribunal in the case of Toyota Kirloskar. And today, let me make it very clear. Today we have 10 judgments reported of various tribunals, including Bombay Tribunal, saying that education cess is a vested right. There is no specific provision to debar the refund of such cesses. Slovak India Karnataka High Court judgment, which says that upon closure of factory, the balance amount lying in the input tax credit must be granted as refund. That judgment of Slovak India is affirmed by the Honorable Supreme Court. Basis that judgment, today we have at least 10 judgments. I have quoted 2 judgments in my PPT, where it clearly says that there is no point in denying the refunds when there is no specific provision not restricting the refund. So this is one very important aspect that needs to be looked at, and that is precisely I am connecting to that 1/3 land deduction refund. Now today, if any person has missed claiming the refund of education cess, I'm sorry, the time is over, because the 2 years is lapsed. And the same question is going to come after 2 years for the 1/3 land deduction. So that is something I would say very important aspect that as a business we need to assess what is the action plan that needs to be taken. Now that is another, I would say education cess refund is another big litigation, including builders who has claimed the refund are facing the litigation in this aspect. At the first level, we are not seeing favorable judgments coming in. But at the tribunal level, yes, there are favorable judgments coming on that aspect. Today, we have at least 10 judgments on the matter. Coming to another very important area of litigation in the builders industry in the context of transitional matters is the denial of credit on the stocks that were lying at the time of transition to GST. Now, the law was like this, that a registered taxable person who was under works contract or who was under the abatement scheme under the earlier law shall be eligible to take the credit of duties and taxes in respect of input held in stock, input contained in semi-finished goods, input contained in finished goods. Now, the claim of department. There is an internal circular issued in the context of, I would say, state tax department, wherein it says that we will not allow the input tax credit on those material that has gone into the building, and the benefit would be allowed only on those material which has not gone into the building. For example, let us say you have purchased a cement bag prior to implementation of GST. If that cement bag is opened and that cement is actually put up into the building in the construction, it has gone in the construction, then the credit will not be allowed. But if the cement bag is lying as it is in the go down, then the credit is allowed. Funny as it sounds, and there's no logic or reasoning given behind this entire, denial of credit. Very unfortunate that when I actually had the opportunity to appear for one of the clients, I came to know that 90% of the real estate businesses in industry have actually have actually accepted this view of the department and have reversed the input tax credit on the inputs held in stock that has gone into the building. Not just that, along with interest and penalties. This is what one of the officers shown me with the data. And I was totally surprised that this is now going to become the law of the land, which is not correct. And I'll tell you the reason behind this entire thing. The entire reason behind this entire thing was, let me just go to the next slide. The first point, the Maharashtra VAT internal circular says that the definition of the term input only cover goods. It does not cover capital goods. Goods means something that is movable, and capital goods means something that is not movable. It is immovable. Once the cement has gone into the building, it is no more goods. It is immovable property, and hence we will not allow you the credit. My humble submission is, if it is immovable property, once the cement has gone into the building, if it is immovable property, if it is not goods, then how were you collecting VAT? Because VAT was on goods, VAT was not on immovable property. How were you collecting VAT on the cement, steel, bricks, sand that has gone into the building? Most importantly, from where is the power coming in to refer to the definition of inputs for the transitional provisions, where there is a circular of department issued in November 2017, very clearly mentioning that the definition of the term inputs, the transitional credits cannot be termed as inputs. And that circular was given in the context of denying refunds to the taxpayer. So a view cannot be taken as per the whims and conveniences. And this circular says we will cover it under inputs to deny this particular credit. Totally in two different directions. So the point is, the words are not just inputs in the law. The words are inputs held in stock. In any builder industry, if you ask me what is stock, means not the one that is lying in the go down. The stock is the unsold inventory, is the stock. As far as the builder industry is concerned, if you ask me what is stock, the unsold industry lying is inventory. Even if it is structured into a proper building, it is a stock. And this is where also there is an income tax judgment in the case of renewal constructions, wherein it is mentioned that it would be assessed as a stock in trade under the head business and profession. More specifically, we need to look at the dimension that it just not covers only inputs. It says inputs, which is one. It also says inputs contained in the semi-finished goods. Inputs contained in the finished goods. Now, from a builder's perspective, semi-finished goods or finished goods is eventually that building which is half constructed or fully constructed, and the inputs contained in that building. So this semi-finished goods and finished goods, unfortunately, is not defined. And very unfortunately, that while drafting the provisions, the specific aspects and scenarios of builders were not considered.
Ravi sir, yesterday only we have just discussed this. The law is structured in general and not with respect to any industry. And when we just apply the provisions of 140 subsection 6 of the transitional credit, that is applicability for the real estate inputs in normal term is a in goods. We can say it's not movable. Sorry, it's movable. In normal term, we say it is movable. It is drafted like it is for the manufacturing industry.
Correct. But sir, I would say we need not adopt general meaning. We need to go for a purposeful interpretation of the law. And when I look at a purposeful interpretation of the law, I have a 20 pages drafted on only this matter, that why the credit should be eligible on these expenses. So I am of a very strong opinion that eventually we'll get a favorable judgments at the tribunal level as to the credits which are there in the context of inputs and inputs contained in the finished goods and semi-finished goods gone into the building for the past 1 year, which was held in stock. I will go one step beyond. Do you know that from where this restriction of 1 year comes? From where this restriction of by 1 year comes? Why not beyond 1 year? Why only for the 1 year? Now let me bring you this couple of judgments of the I think Gujarat High Court. Now here they have given the interim relief, and let me read the judgment. We have heard learned counsel for the parties and are of the opinion that the matter requires to be heard in greater detail. In the meanwhile, it is open to the petitioner to proceed and claim credit or pay duty as the case may be. In case any duty amounts are paid, that will be subject to final outcome of the proceeding. Now here, the interim relief is granted for a matter where it has been claimed that restricting the credit only for the past 1 year is actually arbitrary. I had this expenditure for the past 3 years, it is lying in my stock. More specifically in the context of first stage and second stage dealers, where they have already considered or factored that in the pricing, there's no point in denying or restricting that only up to 1 year. So we need to wait for the outcome of these judgments. But once these judgments, the outcome of these judgments come, the question is not just on the credit, it's on why the restriction of 1 year. Why not beyond that? And let me tell you, there are very fine constitutional arguments on this subject. So this is on another litigation which I talked about, is on the inputs held in the stock, which I would say, at least in Bombay, what I came to know is builders have taken quite an aggressive stand. I would not say aggressive, a stand that the credit of even goods lying in the that's gone into the building is eligible. That's how the stand has been taken in Bombay. Coming to another very important litigation that is created out of this transitional matters in the context of builders industry is this 1% ITC that was transferred. Now, the law says, section 142(11)(c), the law says that to the extent of supplies made prior to GST regime, you pay earlier tax. To the extent of supplies made after GST regime, you pay GST tax. Whatever excess paid because of advances received or various other reasons, you claim it as a credit under the GST law under section 142(11)(c), which was a settled law. Now, very unfortunate, Maharashtra has taken a diversion. Just before the GST was getting implemented, I would say June 1st, 2017, Maharashtra came with a trade circular 18T. I think there is a rule 42B something. Now that rule says that the entire scheme of transition is based on the receipt basis. That is up to May 31st, if your agreement is already registered, then anyway, whatever extra paid, you claim it as a credit. But if your agreement is not registered, then we will consider only receipt basis, irrespective of what is your completion. Your project may be 50% complete, 60% complete, 70% complete, we don't care. If you have received 90%, you pay VAT on 90%, on the balance 10% you pay GST. If you have received 50%, you pay 50%, irrespective of the project completion. On the contrary, the central GST says that the cutoff must be based on the project completion. Now, there is a clear diversion again between the CGST law and the SGST law. And this is exactly what we interpreted when the GST was getting implemented. And this entire slide, I actually took this slide from the presentation which I gave in July 2017. I actually took this slide from that presentation. And that is the time we forecasted that this is going to create litigation, and the CGST and SGST are going in a different direction. Just 15 days back, I got a case where we came to know that SGST department is saying that section 142(11)(c) credit would be denied because you should have paid the tax on receipt basis as far as VAT is concerned. Now, if that is the case, on GST, how would you pay? On the 60% project, you will pay service tax. On the 40% product, you will pay CGST. And the 90% project, you will pay VAT. And 10% project, you will pay SGST. First of all, your system does not allow it. And is this what was interpreted? In my view, this circular and the rule clearly goes against the mother provisions given under section 142(11)(c), which I have quoted here. It clearly uses a word to the extent of supplies. Now, supplies to be again deciphered into the receipt basis, in my view, it clearly goes against the very fundamental of the law. And we all know that there's a Supreme Court judgment, Ratan Meltingware, saying that circular that goes beyond the law is non-existent. So, very important that we must be aware about these things. Now, this is on the transitional matters. Now, let us come to the proper hardcore GST implementation stage. Luckily, one good thing for the builders was when the GST got implemented, all expenses were allowed as credit. Input service, capital goods, everything was allowed as input tax credit. It was a wonderful situation for the builders, very good opportunity for the entire segment to really resurrect. Of course, some litigation is still going on, where departments say that this customer promotion expenses, credit would not be allowed, project launch expenses, credit would not be allowed, and all those things, which is, I would say, it's going in almost all the segments, especially in the project launch. Builders today, nowadays, project launch has become one of the very big, hi-fi aspect in any business, builder industry. The competition is so huge. So builders spend phenomenally high on the project launch, and a huge amount is spent on the food and beverages, which is not allowed as credit. I would say businesses must really plan their expenditure properly. Instead of separately incurring these expenses for food and beverages, can they entirely outsource the event and better get the service as an event management service and availing the input tax credit? Very important aspect to be looked at. However, for commercial projects, that would possibly be more feasible. For residential, if they are under new scheme, it would be better to take 5% rather than 18%. Another big litigation that is, I would say, right from service tax that is going on, and it is continued even in GST regime, is that in the context of builders, if you sell the flats after completion certificate, we all know that it is not taxable. Yesterday, Manish Bhai must have covered on that aspect. Now, department also says that if you're selling the flats after completion certificate, we will deny you the input tax credit. Proportionate ITC needs to be reversed. How, what to reverse, how much to reverse, the calculation and all those things is I have to start right from July 2000 and I have to start from prior to service tax, right from April 2016. I'll come to it a bit later, but this is another big issue of or dispute that's going to continue in the builders regime on the expenses relating to ITC reversal and all those aspects. One very important dimension that I would like to bring here is that if there is an accumulated ITC in a project, it can be utilized for another project. There is a misconception in the entire industry कि अगर एक बार ये project complete हो गया तो उसका जितना भी ITC बचा है वो पूरा P&L में डाल दो and it's a cost. Let me tell you, there is nowhere a restriction in the law for interutilization of credits between the projects. Let us say there is a project going on in Koregaon Park. That project is totally completed. Completion certificate bhi aa gaya. There is an input tax credit of around 50 lakhs as a closing balance in that project. You can actually utilize that input tax credit against another project. There is nowhere in the law to simply expending off this balance unutilized credit. Very important aspect. And more importantly, let us say we cannot utilize this against any other project. There is no other project against which we can utilize this credit. And this company is now going to close because in builders, another beautiful thing is for each project, there will be separate company. Project over, company closed. Because they work under the joint venture models. I've quoted 3 judgments: Slovak India, Bangalore Cables, Sri Krishna Paper Mills. And there are host of more judgments which says that in the context of manufacturing, once on the closure of factory, the balance of credit line must be allowed as refund. And Slovak India is one judgment which is also affirmed by Supreme Court. I must also say here, there are few High Court judgments which are adverse on this same matter. But if you ask me what is the ratio today, it's more of 50-50. Both sides, the judgments are coming in. So what is the harm in trying out when we have a Supreme Court judgment in the case of Slovak India saying that accumulated balance of credit line must be allowed as a refund in the context of factory, and for a builder, once the project is completed, it's closed. It's a closure of business. Most importantly, from the constitutional framework, government cannot collect any tax without the authority of law. So when there is no levy of further taxation in a project, I don't see any constitutional entry allowing government to retain the cost of input tax or inputs and not allowing that as a refund, because in my view, that is a purely levy that goes beyond constitution. Then came the new scheme. In old scheme, there were actually not much issues as far as expenses is concerned. But if there are no issues, I think it doesn't go well with authorities. So that's where the entire new scheme has come, right from April 2019, where this restriction has been made to the input tax credit. Now, if you can see, the projects are divided into RREP and REP, residential, real estate and real estate projects. I'm not going into detail of that. I assume that has been covered yesterday. So in the residential segment, the input tax credit is denied with the tax rate being effective tax rate being 1% and 5%, with the land deduction of 1/3. In the commercial projects, The commercial portion in RREP, obviously the credit is denied because it is a RREP project. But the pure commercial projects where it is more than 15%, it's called a REP project, where you need to charge 12%, you can take full input tax credit. So in a nutshell, post April 2019, residential real estate projects, you do not get ITC. Commercial projects, you get ITC. Commercial projects which are below 15% of the overall project, which also includes residential, can be actually considered as a residential real estate projects, and ITC would not be allowed on that. Under old scheme, the credits were fully allowed. Now this new scheme says that ITC shall not be available and the entire tax needs to be paid in cash. So the restriction is not just on availing of credit, restriction is also on utilization of credit. You cannot even utilize the electronic credit ledger. Tax has to be mandatorily paid through electronic cash ledger. Future procurements, no ITC. Whatever, if you were under the old scheme and there was ongoing project, you take a call whether you want to go under the old scheme or the new scheme. If you want to continue under the old scheme, you could claim ITC, but if you are shifting to new scheme, then you have to proportionately reverse the credit. There was a formula given based on Annexure 1 and Annexure 2, and the proportionate credit was required to be reversed, dated 31st March 2019 by 30th June 2019. I see that in some cases, builders have missed out reversing that credit, which could possibly come out during departmental audits. So if any builder has not reversed, I would suggest them to reverse that input tax credit, because if you are falling under the new scheme, that credit is not allowed. 80% of the input and input services shall be purchased from the registered dealers. This is I really don't know how a taxation law can tell me from where I must purchase or from whom I must purchase. Where is the power and where is the authority in the constitutional framework for a taxation law to say from whom you must purchase? Clearly goes against. The entire rule is absurd, absolutely absurd and arbitrary. But anyway, they thought this is the right approach. In case of shortfall, we need to pay under RCM. I'll go into these aspects of 80%. There are a lot of issues over there. Now, ongoing project. What is the meaning of ongoing project? There's a lot of confusion here. Even today, builders seek opportunity कि ये definition में हम बैठते हैं क्या? And can we actually call ourselves as an ongoing project and go under the old scheme and continue that luxury of having input tax credit? So ongoing project means commencement certificate must be prior to this thing. Construction must have started, something excavation or site work must have started. Completion certificate must have not risen. There's some booking must have happened. Booking means at least one installment is credited to the bank account. Now the question is whether the installment that is credited, whether it must be in the bank account for that project or general, I got the installment for my some other in my entire project, in my entire business, or it must be in that specific RERA bank account. If let us say I wanted to go under the old scheme, I needed to give one declaration to the department by May 10th, 2019. I have missed giving the declaration. Does that mean that I lost the opportunity? In my view, no. The same issue was there in the context of Rule 6.3 of the SENVAT credit rules. We have host of judgments today saying that a mere procedural non-compliance, mere procedural issue of assessing missing to intimate cannot deny them the substantial benefit of the law. So in my view, if an assessee missed intimating, but still he qualifies as an ongoing project, they can still today take a decision to go under the old scheme. but make sure you intimate now to the department. So as I mentioned, promoter needs to reverse the ITC pertaining to unbooked flats as on 31st March, jo bhi, aapka, and there was a calculation, very complicated calculation. I will not go into that calculation today because that calculation is so complicated. I really don't know. A person who is able to do that calculation must actually be rewarded. He must be given an award, special award for annexure 1 and annexure 2. But as a professionals, it is our duty that we really make sure that the reversals have happened properly as per the computations mentioned. Otherwise, it could lead to another litigation. And whatever is the amount of credit that is required to be reversed, you can reverse using electronic credit ledger. And if you do not have that much balance, then it needs to reverse. It needs to be reversed by way of cash through electronic cash ledger. Utilization against commercial projects if all residential projects are under the new scheme. Very, very important. See, as I already mentioned, that there is no restriction in utilization of interutilization of credits against the projects. So if, let us say, after doing the reversal as per annexure 1 and annexure 2, there is still some balance of GST lying in your electronic credit ledger, and you have projects under the old scheme, or you have commercial projects where you are eligible for input tax credit, you can actually utilize that credit. Very important. Purchase records to be maintained project-wise. Sometimes each project would have multiple phases, or for each phase there is a separate project. But eventually, as per law, the purchase records are required to be maintained project-wise. The question that comes is, what is the meaning of the term project? I have a project in Koregaon Park where phase 1 will come in 22, phase 2 will come in 24, and phase 3 will come in 26. Do you mean this is one project or this is 3 different projects? Project means project as per RERA. If you have taken 3 different registrations under RERA, these are 3 projects. If you have taken single registration under RERA, this is a single project. Okay? Generally, businesses take 3 different projects, 3 different registrations under RERA. Records to be maintained for procurements from registered persons and unregistered persons separately. What is that you are purchasing from a registered person under GST? What is that you are purchasing from the unregistered person under GST? You need to maintain separate records. I'll come to that in a bit more detail. How do we really apportion the indirect expenses or the common costs? Very important. Now, see, commercial projects, look at a company which has a mix. Let us say there is a company which has residential projects under the new scheme, residential projects under the old scheme, and commercial projects. Now, for some things, input tax credit is not allowed. For some things, input tax credit is allowed. Within that, there is a reversal of Rule 42, which is a different story. The question is, how do one apportion the common expenses? Professionals, rent. There's a host of common expenses. The expenses pertaining to the capital goods, a common machine used for multiple projects. How do you apportion the credits or the expenses among the projects? There is nothing specifically given in the law. Only under Rule 42 and Rule 43, there is an explanation given, not explanation, I think the last sub-rule specifies that an assessee needs to apportion based on a reasonable basis. Reasonable basis. So हमारे पास choice है. What we feel is right for the taxpayer from the tax optimization perspective, we can accordingly apportion. This is what the rule says. Correct? So you can go through Rule 42 and Rule 43. You will get this relevant provision. So that is very, very important. The important question that comes is, can I adopt one rule in a 1 year and a different rule in a different year and a different rule in a different year based on what is convenient to me and based on what is more beneficial to me? In my view, answer is yes. This is not accounting standards that we need to have consistency and all those things. This is a law and it says reasonable basis. My basis of reasonableness can change from year to year. There is no restriction in the law. Old scheme flat is cancelled in the new scheme. This is another very big issue. We have noted that let's say a flat was booked in the old scheme and it was cancelled in the new scheme, whether I can reverse the 12% tax paid under the old scheme by way of issuing a credit note? Answer is yes. See, we need to understand that the restriction is on ITC, not on credit note. Credit note is a different scenario, ITC different scenario. So there is nowhere a restriction on reversing the taxes by issuing a credit note for a flat that was booked under the old scheme, taxes paid, and which is cancelled. In some cases, we have seen that builders actually don't reverse anything, and from the new customers, they don't collect GST. And to the old customers, they don't remit GST. And they continue that old scheme only. I think that is not a correct approach. The correct approach is to reverse the tax paid under the old scheme, collect 5% tax from the new scheme buyer, reverse the proportionate input tax credit taken on that particular flat, and issue credit note and reverse it 12% credit. So this is the correct mechanism that needs to be followed for the spillover transactions. This is in the context of the new regime taxation. Now let me come to another, I would say one of the most complicated issue in the entire builders industry is this reversal of credit for the unsold flats. We all know that if we sell flats after after the issuance of completion certificate or first occupancy, GST is not applicable. Hence, it is correct on the part of department to expect that assessee must reverse the proportionate input tax credit because you're not paying tax afterwards. Now, to understand this aspect, we need to look at these 7 scenarios. Project that was commenced prior to GST regime, but it is still continuing. Project that is commenced in GST regime and completed prior to April 2019. Project commenced in GST regime and completed after April 2019, and the builder has opted for old scheme. Same scenario, but builder has opted for new scheme. Same scenario, but builder has both the scheme projects running in their business, and projects that are commenced after April 2019 purely covered under the new scheme. So when we really need to understand the mechanism of this reversal of credits, we need to look at all these different scenarios because the situation would change and the computation mechanism would change. For example, projects commenced prior to GST regime. There is already a judgment of Gujarat High Court, Alembic Industries Limited. And this is what was pointed when Finance Act 2016 under service tax, they brought an amendment under Rule 6.3 of the SENVAT credit rules. Now, under Rule 6 of the SENVAT credit rules, earlier, the reversal was required if it was taxable service and exempted service. Then the question came for the builder industry that to be falling as an exempted service also, it must be service in the first place. When something is not a service in the first place, how you can call it as an exempted service? And therefore, the meaning of the definition of service given under section 65B 44 clearly mentioned that the transfer of immovable property is not a service under the service tax law. There is no question of reversing the SENVAT credit was a view that was taken. Government realized this issue in April 2016. And in April 16, 2016, there was this amendment in the budget wherein they have plugged this loophole. I would say it was a loophole. The question that comes is, when this was plugged in April 2016, whether this applicability is prospective or retrospective. Department was applying this retrospectively. This is exactly what was pointed and identified by us right when this Finance Act 2016 was amended. And today we have at least 10 judgments, and also 10 judgments, host of judgments of tribunals and Gujarat High Court judgment that prior to April 2016, there was no question of reversal of SENVAT credit, even if the flats are sold after the commencement, after the completion. Because what was required to be reversed is in the context of exempted service, and the flats that are sold after completion certificate are not service in the first place. There is no question of calling it as an exempted service. Absurd, but this is what the law was. Then came GST regime, and the biggest problem prior to April 2019 was, as Manish Bhai yesterday pointed out, while drafting the law, they did not realize the specifications of builders. They have the law that was there between July 2017 to March 2019 was that based on turnover, you need to reverse the input tax credit. Now, I have incurred expenditure and which is used for a specific project, and to the extent of turnover of the flats sold after OC, you need to reverse the project. There were multiple confusions over there. First and foremost confusion is that under the builder industry, you cannot link it to the turnover, because initial years when you will do the expenditures, you will not have any flats that are sold after OC. The after OC flats will be only after majority of your expenditure and construction and all the expenses are completed, correct? And at that time, when you are selling the flats after OC, you will hardly have expenses, correct? So eventually department was in the losing end, and the assessees, when they really apply this rule, it was actually favoring a taxpayer inadvertently, although it was illogical. The entire formula was illogical. Now, the worst part was this was not to be calculated at a project level, it was to be calculated at a GST number level. Now, the funniest thing was, let us say I am a company, I have one GST number and there are 10 projects running in. For an expenditure incurred relating to one project in which I am paying GST, unfortunately under the another project, there are a lot of flats sold after OC. I need to reverse input tax credit for this project against that project. That was the most funniest thing. And I'll tell you, when we do these calculations, it is like a gamble. You know, आपका वो project mix कैसा था, completion कब आया है, and all these things will play a role. Either you will gain a bit substantially because you did not have luckily expenditure in that year because when the courses came, or you will lose substantially. Absolutely illogical, this entire framework, the way in which it was designed. Now, this issue was realized in March 2019. And the worst part, notification comes on March 28, 2019. It was made effective from April 1st, 2019. And now the new rule that was there, they amended this rule 42 thoroughly. And they brought that you need to do the reversal based on carpet area calculations, which means, and that too at a project level, not at a GST number level. Which means, let us say I have a 10,000 square feet carpet area. Out of 10,000 square feet, I have sold 2,000 square feet after OC. Then whatever is a proportionate input tax credit for the 2,000 square feet, the one that is taken in that financial year, and right from when the commencement of the project, you need to reverse this input tax credit. This is exactly what businesses were doing under the service tax regime. This is exactly what the businesses were also doing, even though the law was absurd prior to April 2019. And I think more specifically, now the law was properly framed, where they have asked to do the reversal based on the carpet area calculations, which needs to be separately calculated for each project. Basically, which also means that project level expenditure needs to be accounted. So the problem is like this. When this notification came in April 2019, it was clearly mentioned in the notification that it is effective from 1st of April 2019. But when the rules are drafted, in the rules, it has been mentioned that you need to do the calculation for the reversal from 1st of July 2017. Now I have a problem over there. How can a notification which is effective from 1st of April 2019 give effect by way of a rule through a retrospective amendment? What happens if a particular builder, based on the law as it was in 1718 and 1819, already reversed based on a turnover calculation, does that person has to again reverse based on this rule calculating from July 2017? In my view, no. Whatever absurd it was the law prior to March 2019. And this carpet area calculations has to be done only from April 2019 onwards, even if the project was started in July 2017. That is another litigation that is going to happen as far as the expenditure and ITC reversal is concerned. Of course, if you are under the new scheme, you must have already done the reversal by doing this calculation under Annexure 1 and Annexure 2 for the residential projects, and so that somewhere takes care of this issue. If a person is having both old scheme and new scheme, another new dimension that comes in over here is how do you apportion the common expenses and common cost? I'll tell there is one problem over there. I'll come to it a bit later. And if a person is having commercial projects on which he's going to pay the taxes later, how do you apportion that? There's a specific rule where they have mentioned that to the extent of commercial, first you need to do simple carpet area calculation when you are transferring to the new scheme. Then after that, you need to apply that to the commercial carpet area to the extent of carpet area in the commercial. And this will give you the holistic carpet area. And based on that, you need to claim. In a nutshell, the carpet area of commercial and the carpet area of old scheme needs to be considered for the purpose of taking the credit. And the carpet area of new scheme, would the proportionate credit would be denied. Projects that are commenced after April 2019, nothing doing. Credit itself is not allowed for residential. For commercial, again, the same calculations and all those things there. So this is what the computations and formula is. I'll not go into too much into detail. So if you see the serial number E, earlier it was turnover basis, later it was made carpet area basis. So again, here we need to do preliminary calculations. Provisional calculations are required to be done on a monthly basis, and the final calculations are required to be done at the time when the completion certificate is received in the year, in the next year, in the year subsequent to the year in which the completion certificate is received. For example, let us say the project has started in April 2019. In that case, you must do provisional reversal on a month-on-month basis. And let's say you have received the completion certificate in June 2022. Then in April 2023, you need to do again the fresh calculation right from April 2019 to June 2022, do the complete fresh calculation. And if there is any excess to be reversed, you need to reverse in April 1, 2023. Or if there is any excess to be claimed, you need to claim as a credit by September 2023. 2-3 issues here. So this is what the calculations is. I'm not going into the mechanism of the calculation. Now 2-3 issues here. First and foremost issue is that when I am being asked to reverse in April 2023, it says reverse by first day of April 2023. Now, how do I reverse by first day of April 2023? Because the return goes on April 20th. So whether for the 20 days, the interest which is being asked, is it justified? No, do the reversal by way of DRC 03. If I do the reversal by DRC 03, there will always going to be mismatch in my returns. So does that mean that the government does not want me to disclose this in my GSTR 3B and do the reversal on first day of April 2023 and show it directly in the annual return? That is what the law is. Again, in my view, that is absurd. Next, very important aspect. It is mentioned that if out of this calculation, you have already reversed extra, then you can actually claim it as a credit. Now, it is again going opposite to section 16 subsection 4, which already have a capping on the time limit of taking credit. So in my view, in this particular case, even for the expenditure of April 2019, you can claim credit before September 2023. The rule section 16 subsection 4 would not be applicable in this particular scenario, because originally the section 16 subsection 4 is only for the original availing of the credit. It is not for the re-availing of the credit. There is difference between availing and re-availing. In this budget, Finance Act 2022, this has been categorically brought by amending section 41 of the CGST Act, which is yet to be implemented. Now, whether these final computations are required to be done annually or at the end of each project, it has to be done at the end of each project. You need not do annually. In manufacturing sector, it is required to be done annually. In the builder sector, only in the year in which you receive the completion certificate. The subsequent year, April, you need to do this reversal calculations. Another very big issue is that this interest which is payable after first day of April, whether it requires to be paid merely for availing the excess credit, or it needs to be paid only on utilization of the excess credit. The law says even excess credit is availed, you need to pay interest. In my view, I don't agree to it. Interest needs to be paid only if it is availed and utilized. I think this is also now more or less settled. A lot of judgments, even the law is amended, but the rule is not amended. So this is what I already talked about. Legal validity of reversal computation between July 2017 to March 2019. That rule which is prospectively asking the assessor to do the carpet area calculation. I would say that is not correct. Law as it was there in 1718 and 1819 must be applied. This is, I think, already covered. The where it is multiple projects, multiple GST, we have to apportion based on a reasonable basis. So this is, I would say, the entire framework of ITC reversal mechanism which is there. There are some confusions over here, but eventually, if the flats are sold after completion certificate on a carpet area basis at a project level, one has to do the calculations and reverse the proportionate input tax credit. If there are certain expenses commonly incurred for multiple projects, then first you need to apportion those expenses to the projects and then do the reversal. One issue that is there over here, if I have to apportion the expenses among different projects, let us say each project is a separate entity, then there is no problem. I will raise an invoice and that entity will get the credit, which if it is eligible, they will take. If it is not eligible, they will not take. But let us say multiple projects are there under the same GST number. I cannot raise the invoice, GST invoice under the same GST number, correct? We need at least 2 GST numbers to raise a GST invoice. I cannot supply to myself and raise invoice under the same GST number. On the contrary, Rule 42 says that the apportionment must be at the invoice level. Now, my biggest problem is like this. Let's say there are multiple projects, there are common expenses, or there are capital goods related expenses. I will apportion the expenses, great. But I cannot raise tax invoice because it is under the same GST number. Then how do I really do the reversal of credit? Because Rule 42 says that the apportionment or bucketing between the taxable and exempt must be at the invoice level, but there is no invoice. So that is I would say still an anomaly. It's not clear. What is suggested is we apportion even if it is not an invoice level, reverse the input tax credit. That is the best that a taxpayer can do. Next, very important aspect is this 80% reversal mechanism. Now, this is another animal that is there in the builders industry. It says that if you are under the new scheme and paying tax at that 5% scheme in the residential this thing, then at least 80% must be purchased by the promoter in a financial year from the registered persons. And if it is purchased by unregistered person, the shortfall will be taxed. To the extent of 20% shortfall, there is no problem. But if it is beyond 20%, it will be taxed. Let's say आपने 100 रुपया expenditure किया है, 75 is from registered person, then and 25 is from unregistered person. So that 5 rupees will be taxed under reverse charge. 20%, there is a cushion or a buffer which has been given. This is for the goods or services. For the cement, I don't know cement से problem क्या है government को, and I really don't understand. Just because cement का rate 28% है, sorry, in the middle ये जो 18% लिखा हुआ है, that must be 28%. That's an error in the slide. For the cement, there is no question of 80%, 20%, all these things. अगर एक भी आपने cement bag लाया without from an unregistered person, for each and every cement bag, you need to pay GST under reverse charge what you purchase from unregistered person at the rate of 28%. ठीक है ना? So जो 80% वाला जो cushion है cement के लिए नहीं है. Similarly, ये 80% वाला cushion capital goods के लिए भी नहीं है. ठीक है ना? So it is only for input and input services. Now the question is, how do we really do this calculation of 80%? And a lot of I have seen I had a communication with few professionals where I have noted that simply P&L में जाओ, ट्रेडिंग और P&L अकाउंट देखो और पूरा डंप निकालो और देखो किस पे GST भरा, किस पे नहीं भरा, और उसको 80-20 से बाइफरकेट करो और क्लोज करो. That is not correct approach. That is absolutely not correct approach. I'll tell you why. This is the illustration which I have given. So if you see this cement, if it is brought not from unregistered person, they need to pay GST on this this thing. So if beyond 80%, whatever, if you are purchasing less than 80% from the registered person, then that balance needs to be paid by 30th June of from the end of the financial year. And 21-22 का ये 30th June तक अगर अपने क्लाइंट का 80% के नीचे जाता है तो ये टैक्स पे करना पड़ेगा अंडर रिवर्स चार्ज. दिस इज ओनली फॉर इनपुट एंड इनपुट सर्विसेज. फॉर सीमेंट ये 30th जून का बेनिफिट नहीं है. फॉर सीमेंट एवरी month on month you must be paying for cement and for capital goods. Let me tell you, for cement and capital goods 80% cushion is not available. Tax also needs to be paid on a monthly basis. For rest all the expenditures 80% rule is available. Tax needs to be paid by 30th June of the next financial year. This rule is applicable for each project separately and for each financial year separately. यानी ये आप एंटिटी लेवल पर या जीएसटी नंबर लेवल पर नहीं कर सकते हो. दिस हैज टू बी डन फॉर ईच project separately, this entire calculations, and this also cannot be done for the entire expenditures of a project. This has to be done for each financial year separately. Ideally government should have ultimately done it at a project level जैसा rule 42 में किया था. अभी इसमें प्रॉब्लम क्या हो जाएगा? फॉर ईच फाइनेंशियल ईयर में, लेट अस से फर्स्ट फाइनेंशियल ईयर I had some expenses which was from unorganized, थोड़ा excavation, earthwork, site leveling का काम था, तो I got it done from some unorganized laborers. तो मेरा पूरा मुझे रिवर्सल आ जाएगा. Second year I purchased from registered person. In the last year again when the project was getting completed, the calculation was not reaching the 80%. So ये inconsistency रहेगा. And the biggest problem is there is no set off available. यानी समझ लो सर मैंने ये साल 85% लिया है तो अगले साल वो जो एक्स्ट्रा 5% का सेट ऑफ मिलेगा क्या? आंसर इज नो. एवरी ईयर 80% देखना पड़ेगा. ठीक है ना. तो आपने एक साल 85 किया तो आप फरवरी मार्च में टैक्स प्लानिंग करो कि भाई 85 करना है या फिर कुछ परचेजेस को आपको आगे लेना है, so that you can actually claim the benefit in both the financial years. But there is no set off, there is no spillover benefit, all those things are not available. Each financial is a fresh financial year, needs to be calculated for each and every project separately. आप पूरा टैली लेकर कंपनी लेवल पर जीएसटी नंबर लेवल पर करोगे तो पूरा गलत है आपका कैलकुलेशन. ठीक है. Whether this needs to be calculated on an accrual basis or receipt basis, I already mentioned. For cement and capital goods, it has to be immediately on the accrual basis. This calculation needs to be done because they are goods. For goods पे वैसे भी advances पे tax लगता नहीं है. But for the balance, it has to be done on an accrual basis. I mean, it has to be on the accrual basis as and when you account the expenses in the books of accounts. Tax needs to be paid by 30th June of the next financial year. एडवांसेस अगर आपने किसी को दिया है तो यहाँ पर एक बहुत बड़ी अनोमली है कि इफ आई हैव पेड समबडी एडवांसेस तो मेरे बुक्स में पीएनएल में नहीं आएगा, वो क्रेडिटर्स में रहेगा. तो वो एडवांसेस भी मुझे कंसीडर करना है कैलकुलेशन में. स्ट्रिक्टली स्पीकिंग यस करना चाहिए, बट देन बिकॉज एज पर रिवर्स चार्ज की जो टाइम ऑफ सप्लाई की प्रोविजंस है, एडवांसेस पर भी रिवर्स चार्ज लगता है. बट आई वुड से दैट इज नॉट द इंटेंशन ऑफ द लॉ, and it would lead to absolute absurdity in the calculations, so we can possibly avoid it. लेकिन अगर किसी के एडवांस substantially high है, then I think that is something needs to be revisited, especially जहाँ mobilization एडवांस देते हैं. Procurement from composition supplier. सर हमने composition supplier से खरीदा है जो 6% लगाता है या 1% लगाता है. Whether that will be counted as purchase from the registered dealers? Answer is yes. Because composite supplier is also a supplier registered under the GST law, it will be considered as purchase from the registered dealers. So where possible, this can also act as a wonderful tax planning tool for the businesses. More specifically in the service sector, because क्या होता है, goods sector में composition tax, composition player से लेकर कोई मतलब नहीं है, because already if he has purchased from the manufacturer who is registered, the tax has gone in the pricing. But service sector में क्या होता है, especially manpower supply and all those things, they will not have much taxes in their expenses. It will be more of salaried employees. So there is a real benefit in the service sector. Computation to be made, I told already, it's made financial year wise, initial project. Again, same, because इधर भी calculation आपको project level पर करना है. How do you apportion the common expenses between the project? Unfortunately, इधर तो कोई mechanism दिया ही नहीं है. At least rule 42 में they have written that you do it on a reasonable basis. Here, they did not even mention how this apportionment allocation of expenses needs to be done between the projects. So the question comes that for the common expenses, whether at all reversal is required, whether at all this 80% criteria is required, whether we need to say that this is for the construction or this is in general indirect expenses, because we all know if there is no mechanism provided in the law, then there cannot be a taxability on that. Suresh Kumar Bansal, Delhi High Court. I think ये मुंजाल कंस्ट्रक्शन का जो गुजरात हाई कोर्ट का अगर आप जजमेंट पढ़ोगे तो उसमें they have heavily relied on the Suresh Kumar Bansal judgment. That is very important. When the law does not provide the mechanism of value, there cannot be a tax. And there is a landmark income tax judgment on this matter. I am not getting the name. Then what happens to these expenses? Stamp duty, income tax. See, what is required to be paid under reverse charge is the goods or services received, input or input services. Stamp duty, income tax are not input or input services or goods or services. They are duty and taxes in itself. So you need not consider them in the calculation of 80%. HSD, natural gas, electricity, they are not within the purview of GST. You need not consider neither in numerator nor in denominator. TDR, JDA, FSI, long-term lease premium, law में specifically दिया हुआ है that this need not be considered. Salaries to employees is neither a supply of goods nor a supply of service. It should not be considered. Reimbursements to employees takes the color of salary, need not be considered. Interest on loan. अभी builder industry में interest बहुत बड़ा amount होता है. I think almost majority of the builders, none of them is doing business based on their own money. Everybody is doing based on the financial assistance of banks and institutions. So interest generally will be a very big component. Generally, all these banks, financial institutions will be registered under GST. So अगर वो registered है GST में, there is no problem. Because law ये नहीं बोलता कि वो exempt उस पे tax लगता है नहीं लगता है. वो registered से किया या unregistered से किया. अगर आपने जाकर इंडिया बुल्स से अगर लोन लिया और उस पे इंटरेस्ट है, इंडिया बुल्स इज रजिस्टर्ड अंडर जीएसटी, सो इट विल कम as if purchased from registered person only for your 80%, ठीक है ना. But let us say अगर आपने इंटरेस्ट लिया unregistered person से, या फिर आपने okay ठीक है, first let's look at this. Now इंटरेस्ट आपने unregistered person से लिया है, whether on this GST you need to pay under reverse charge, or let us say आपने जिससे खरीदा है उसका 20 लाख के नीचे है, उसका वो लिमिट ही नहीं है, तो whether on these items GST needs to be paid under reverse charge. Again, important question that comes is a transaction which is exempt, which is not liable to tax, can it be taxed indirectly? See, I am not talking about cement, steel, brick, sand, stones. If that is purchased from unregistered person, which is a taxable item, yes, you need to pay tax. But an item which is even otherwise exempt, or which is even otherwise not taxable because that 20 lakh limit is not crossed, on that, if I purchase from unregistered person, I am of a strong view that there's no question of considering this in either numerator or denominator, or requiring the reversal of credit over here, because what is not within the coverage of tax cannot be taxed indirectly. Depreciation, आपने already capital goods consider कर लिया अलग से, तो फिर से depreciation को आप calculation में मत लीजिए, neither in numerator nor in denominator. Approvals and sanctions, अभी ये एक बहुत important issue होता है. Generally, these governmental authorities are registered, but I'll tell you, these approvals, sanctions are neither a supply of goods nor a supply of service. There cannot be a levy of taxation on this. Why? Because they are more in the nature of permission. There is not an express act of doing something, or there is no quid pro quo here. And there's a lot of jurisprudence in this regard. I have to take a 2-hour session only for that. Transactions on which you've already paid tax under reverse charge, anyway, that will be considered as registered person only. So this leads to a very important aspect. A lot of builders would require to do contract structuring, किससे लेना है, कैसे लेना है, एम्प्लॉयमेंट कॉन्ट्रैक्ट वर्सेस मैनपावर सप्लाई कॉन्ट्रैक्ट या 18% जीएसटी लगेगा जो कॉस्ट हो जाएगा, एम्प्लॉयमेंट कॉन्ट्रैक्ट दे क्या, प्योर एजेंट में जाएंगे क्या. अनफॉर्चुनेटली अब पैरेलल इकोनॉमी स्टार्ट हो रही है. आई हैव सीन अ बिल्डर जिसने नीचे 50 कॉन्ट्रैक्टर ले लिए 20-20 लाख के नीचे, और बोलता है आप सप्लाई करो हमको, लेबर कॉन्ट्रैक्टर्स. सो ऑल दिस क्रिएटिविटी starts. I think rest of the points I've already covered. तो ये देखिए आप यहाँ पर अगर आपको सैंड खरीदना है या ग्रेनाइट लेना है, जिप्सम लेना है, ब्रिक्स लेना है, सोलर इक्विपमेंट लेना है, मार्बल प्रोडक्ट्स, तो डोंट मर्ज इन द कॉन्ट्रैक्ट, परचेज इट इंडिपेंडेंटली. क्यों? आपको 5% या 12% में मिलेगा. लेकिन आपको सीमेंट लेना है, उसको कॉन्ट्रैक्ट में डाल दो, 28-18 हो जाएगा. तो ऐसा टैक्स प्लानिंग करना जरूरी है. आई थिंक इफ अ बिल्डर प्रॉपरली डज अ टैक्स प्लानिंग, दे कैन सेव आउट ऑफ दिस, because there is 5%, there is 12%, there is 18%, there is 28%. 28 को 18 में मर्ज कर सकते हैं, 5 को सेपरेट कर सकते हैं. So all those possibilities are there. Very important, which many builders are not aware, is if you are undertaking any of these projects. I mean, अगर आपका प्रोजेक्ट ये कोई लिस्ट में फॉल होता है, स्पेशली द लास्ट वन जो फोर्थ वाला है, इंफ्रास्ट्रक्चर स्टेटस, यानी आपका अगर 60 स्क्वायर मीटर से कम वाले प्रोजेक्ट्स है, तो आपका जो कॉन्ट्रैक्टर है जो आपको कंस्ट्रक्शन करके दे रहा है, he can actually go under 12%. I am not talking about the 50% वाला स्कीम. 50% वाला स्कीम अगले स्लाइड में है, वो मैं नहीं बोल रहा हूँ, जहां पर मिनिमम 50% आपका 60 स्क्वायर मीटर अफोर्डेबल हाउसिंग में होना चाहिए. I am not talking about that. Affordable residential apartment is different. Affordable housing is different. Both are two different things. Please understand. And this is something many builders are not aware, that if they are going for the affordable housing projects, where it is less than 60 square meters, even if उनका अगर 50% से नीचे वाले प्रोजेक्ट 50% से कम है, still they can ask the contractor to charge GST at the rate of 12%. This is coming out from notification number 11/2017. Baki, all these things I've already covered. One very important aspect is cost benefit analysis के REP में जाना है या RREP में जाना है, स्पेशली जहां पर कमर्शियल का जो एलिमेंट है वो 10 से 20% के बीच में है. तो at the time of taking RERA registration only, you should be very clear, because sometimes it is beneficial to, अगर कमर्शियल का पोर्शन 12-13% है, तो अगर हम बिल्डर को सजेस्ट करें कि सर आप उसको 16-17% पर अगर लेकर आ सकते हो तो आपको क्रेडिट मिल जाएगा. करेक्ट? And let me tell you, ITC scheme, the old scheme, we have worked out all numbers. Old scheme still the most beneficial scheme. ठीक है ना? Next very important aspect जो एक बहुत बड़ा बिल्डर इंडस्ट्री में प्रॉब्लम है कि प्रोजेक्ट्स एज इज वेरियस बेसिस पर सेल आउट हो जाते हैं. एक बिल्डर ने प्रोजेक्ट स्टार्ट किया, वो कंप्लीट नहीं कर पाया, एंड वो एज इज वेरियस बेसिस पर दूसरे बिल्डर को दे देता है, लॉक स्टॉक एंड बैरल. द क्वेश्चन इज on these kind of projects whether it is taxable. There is an argument saying that no, it is done before completion certificate, पूरे पे आपको 18% GST भरना पड़ेगा. I am of a different view, because in my view this is clearly a case of transfer of the going concern of an independent part thereof, and this is not taxable. And whatever is the credits that is there into the earlier this thing can be transferred by way of ITC 02, which is a mechanism to transfer the credits. Most importantly, if you say that on the slump sale GST is applicable, fundamentals questions will come. How would you arrive at the land deduction? Do you still take land deduction to be 1/3, where the construction portion is only 5% or 10% or 20%, where only fencing is done? Do you still take the land deduction as 1/3, or do you segregate based on this decision? So there are a lot of loopholes over there, and this exemption entry under notification 12 of sale of going concern, either as a whole or independent part thereof, is very important. Next very important aspect of discussion that we would do in the context of TDR and JDS, joint development agreement. में बहुत ज़्यादा डिटेल में नहीं जाऊँगा इधर, because I am expecting Sunil sir would take in great length on JDS, but I will talk only from the RCM and ITC point of view. So if a promoter purchases TDR from any person or takes long-term lease from any person, it is liable under reverse charge in the hands of promoter. अभी यहाँ पर अगर ये आप देखोगे स्लाइड, डेफिनेशन में सिर्फ एक ही वर्ड दिया है, प्रमोटर. As per RERA, promoter means the one who causes the construction. Causes the construction में, और जो RERA की जो डिटेल जाती है, लैंड ओनर प्रमोटर भी प्रमोटर है, डेवलपर प्रमोटर भी प्रमोटर है, तो लैंड ओनर इज ऑल्सो अ प्रमोटर, डेवलपर इज ऑल्सो अ प्रमोटर. Now the point is like this. Let us say एक प्रोजेक्ट में आपको एडिशनल एफएसआई चाहिए और आपने लैंड ओनर प्रमोटर ने वो एडिशनल एफएसआई ली, ठीक है ना. तो पहले तो लैंड ओनर प्रमोटर रिवर्स चार्ज में भरेगा, जिसका उसको क्रेडिट नहीं मिलेगा इफ ही इज अ रेसिडेंशियल प्रोजेक्ट. And when the landowner promoter is transferring this FSI to the developer promoter, again there is a liability under RCM between a promoter to promoter. So is it that same transaction is being double taxed at 18% at the first stage and another 18%, 36% at the second stage? This is a clear anomaly in the law. In my view and understanding, the term promoter here has to be read only as a developer promoter, the one who is actually doing the construction. Because अगर आप description में देखोगे ना, तो वहाँ लिखा है services by any person by way of TDR for construction of a project. तो जो construction जो कर रहा है वो developer कर रहा है, तो जिसने TDR लिया for construction उसी पर आएगा reverse charge. But अभी department can always take a view कि भाई जो land owner किसके लिए ले रहा है, वो भी तो कंस्ट्रक्शन के लिए ले रहा है, भले वो किसी और से करवा रहा है. So there is a big anomaly over there. But somehow I am not convinced with this double taxation that is there. Most importantly, since many builders are not aware about this, जब उनका JDA agreement बनता है, they don't factor this properly. In fact, we are suggesting our clients कि आप क्यों land owner को बोल रहे हो, आप ही ला लो directly FSI. But many times practically ये सब चीजें होती नहीं है, because depend करता है who is the strong authority in the contract और किसकी पावर है लेकर आने की FSI, किसके पास एलिजिबिलिटी है लेकर आने की FSI. तो ये काफी डायमेंशंस होते हैं. So this is one area of concern here. But then the matter of the fact is that GST is payable under reverse charge for the builders for joint development agreements, TDR जो वो लेते हैं for development works. Luckily, if you are taking these TDRs for the residential project, then there is an exemption. अगर आप residential के लिए लेते हो तो exemption है, subject to the condition कि आपको पूरे flats completion certificate के पहले बेचना चाहिए. अगर आपने कुछ flats after completion बेचे हैं तो proportionately उतना TDR पर reverse charge liability आएंगी at the time of completion, ठीक है ना. And so that is for the residential. For the commercial ऐसा कोई exemption नहीं है, full amount पे GST भरना है, reverse charge at the time of completion. Abhi there are some important aspects that we must note here. So except where this is the law which is there, और इसका calculation भी है in the case of residential. How do you calculate? कितना आपने complete carpet area. This is again a carpet area wise calculation. कितना आपने completion के पहले बेचा, कितना कंप्लीशन के बाद बेचा, वो हिसाब से कैलकुलेट करके आपको अगर कंप्लीशन के बाद में कुछ कारपेट एरिया बेचा तो उतना रिवर्स चार्ज में आपको भरना पड़ेगा. बट द पॉइंट इज व्हेन दिस कारपेट एरिया कैलकुलेशन इज डन, whether the developer has to consider only the carpet area of his portion or he has to consider the carpet area for the entire project including the landowners. In my view, it has to be only the developer's carpet area needs to be considered. Still, law is not clear on that point as of now. It doesn't come out very clearly. Now, in case of JDA projects, ITC related, certain aspects I would like to quickly touch upon. I will go a little faster now because I think time is already 9:45. Ideally, I must try to complete in next 5-10 minutes. We may extend by 5 minutes. I regret for that, but I'll also try to cover questions. So in JDA context, let me look at quick insights or quick aspects. Timing of billing is very important because law says at the time of completion आप reverse charge में भरिए tax. But अगर आप reverse charge में at the time of completion भरोगे, then how would you utilize that taxation? So ideally we suggest our clients to pay it right at the commencement of the project, or you pay it over a period of the project. Don't wait till the end, because आप लास्ट में रिवर्स चार्ज में भरोगे तो तब तक प्रोजेक्ट ही कंप्लीट हो जाएगा, आप किसके अगेंस्ट यूटिलाइज करोगे उसको, ठीक है ना? दैट्स अ वेरी इंपॉर्टेंट इशू. रिवर्सल ऑफ क्रेडिट, अगेन एज पर दिस नोटिफिकेशन नंबर 11 जो कंडीशन दी है, फॉर अ landowner can take credit when the builder charges for his flats. For landowner the credit is available, but the landowner need to reverse the credit if landowner is selling some flats after the OC. Now wahan par the wording is apartment wise, unit wise, rather than carpet area wise. And flat number 101 पे builder ने कितना GST लगाया, flat number 101 मैंने before OC बेचा या after OC बेचा. Now again ये अनॉमली हो गई यहाँ पर फिर से. तो लैंड ओनर के लिए रेसिडेंशियल में रिवर्सल का जो कॉन्सेप्ट है, दैट इज फ्लैट वाइज, अपार्टमेंट वाइज, एंड इन जनरल एज पर रूल 42 इट इज कार्पेट एरिया वाइज. सो दिस इज अगेन दैट लॉ इज गोइंग इन टू डिफरेंट डायरेक्शंस. देन revenue sharing, there is no question of reversal because there is no question of ITC. Taxability नहीं है उसमें. Position remains the same even for JDS entered prior to and or after April 2019, because the law was same as far as ITC is concerned. Prior to service tax regime, if there was any JDA entered on the development rights in the hand of landowners, development rights पर GST लगता ही नहीं था. There was no service tax, so there is no question of ITC in the hands of builders. Administrative, marketing expenses and all the other expenses, builder can take the input tax, the landowner can take the input tax credit. So this was specifically for the landowners. What is the mechanism of taking the credit? Now let me come to the builders. In the case of builders, ITC, as I mentioned, prior to April 19, it was available. Under the old scheme, it was fully there. New scheme, you have to do this proportionate reversal. Annexure 1, Annexure 2, I have already talked about this. ITC restricted for JDS entered. If it is after April 2019, then ITC is restricted. Tax to be paid under RCM by the developer. If it is a residential project, the credit is not available. Unfortunately, if it is a commercial project, the commercial portion in the RREP, you need to pay, the builder need to pay GST under reverse charge. Even if it is less than 15%, builder need to pay GST under reverse charge. But unfortunately, because it is RREP project, the builder cannot take credit. So it's a double whammy, clearly a double whammy for the builder. This is a point which I was trying to talk about. Double taxation I have already talked about. For commercial projects, it has been seen that this entire scheme of paying GST under reverse charge is leading to working capital blockage for the builders, because they can't pay this tax in the end and they have to pay in the start. And the moment they pay the tax in the start, it blocks the entire working capital. See, one very important aspect which the builders and landowners can actually do in these cases is that for the transfer of development rights, the landowner will bill for the building portion, the builder will bill. Both can bill to each other, take the credit, knock off the transaction, matter gets closed. Only one important aspect here that needs to be understood is that whether the builder can take the input tax credit, whether the landowner can take the input tax credit is a matter of question. But in our view, he could surely take the credit of input tax for the flats for which the builder is charging. There is already a Orissa High Court judgment in the case of Safari retreats on that matter. Very important aspect I would like to touch upon is on the RCM on government services. There is a lot of questioning ke ye itne permissions lete hain, builder will take various sanctions from the government, whether it is liable under reverse charge. Answer is no, it is not liable under reverse charge, because these are the two exemptions I am talking about. Services provided by central government, state government, union territory or local authority by way of registration required under any law for the time being in force. So builder जितनी भी permission और सब चीजें लेता है, eventually it leads to a registration of that project under RERA or under the PMC. So it is exempted. And second, these are all the activities that are covered under Article 243W of the Constitution of India, by way of 12th schedule urban planning, including town planning and regulation of land use and construction of building, is categorically excluded. You need to refer notification number 12 for governmental authority, and for central government, state government, and local authority. Central government, state government, union territory, and local authority, the benefit is given under notification number 14. So all these sanctions and all those things, in my view, are not liable to GST. Important question that comes, even for the TDRs that are purchased through DRC certificate directly from the municipality, not the ones which are procured from the market. जो एडिशनल FSI और TDR जो आप डायरेक्टली DRC म्युनिसिपैलिटी से खरीदते हो, वो भी ये 243W के एग्जेम्पशन में आ जाएगा, ठीक है? So this is the another rate benefit where if the quantum of affordable residential apartments is more than 50% in the project, then you can ask the contractor to charge only 12% instead of 18%. For residential apartment, this will be a big boom, because they are anyway not eligible for credit. So 6% का straight away saving होता है. लेकिन अगर 50% से कम होता है आपका affordable housing, then on the entire project you need to pay the balance 6%, not on the proportion of the entire project. Very, very important. Next, fundamental, very important aspect is construction cum leasing contracts. Many times, builders will construct very large integrated business parks, very large commercial complexes, and they don't sell it, they give it on lease, either short-term lease or long-term lease. So firstly, short-term lease, let us say 30 years, 20 years, 5 years, there is already a judgment of Orissa High Court that in these cases, the credit must be eligible. Government is denying the credit under section 17, subsection 5, subclause C and subclause D, that it doesn't lead to further supply of works contract service. I strongly disagree with that view. Today, we have Sai Samhita storage, one of the landmark judgments under service tax regime, because the restriction was also there under service tax regime. Mundra Port and Millrock Earth are the three judgments which are already there. Orissa High Court Safari Retreat judgment, the matter is pending before the Supreme Court right now. I would like to only point out one very important observation in Millrock Earth, Sestat, Mumbai. If you see, it says hotel construction is not the end activity of the appellant. Rather, their end activities are accommodation, restaurant, and spa. So what is the restriction? The restriction says for construction, it must be for the further supply of the construction of the immobile property, then it is restricted. So it is not for construction. In this particular case, construction is only an activity, but it is actually used for the further supply of taxable services in the context of renting, leasing, accommodation, and host of other services which the businesses are going to do. And hence, the credit restriction should not be there. Many assessees have already filed writ petitions. We have filed writ petition in Nagpur High Court and Punjab and Haryana High Court on the same matters, because the stakes are very high. Aap just imagine kijiye, a big commercial complex worth 150 crores of investment. If an assessee is told that on that investment he is not going to get a credit of 18%, the entire feasibility of the project would get affected. So we see we need to wait for Orissa High Court judgment, and a lot of writ petitions that are pending. We need to wait for the outcome for them to understand the ultimate taxability on this aspect. The constitutional aspect is also covered in Orissa High Court judgment, where they have talked about the statement of objectiveness of bringing GST and the aspect of manifest arbitration under Article 14 of the Constitution of India. Okay, when I started this session, I thought I will aram se complete in 2 hours, but this has taken a long time for me. The subject itself is so vast. With this, I conclude my session. I thank you all for patient listening. I thank Pune branch for giving me this opportunity, and special thanks to Rajesh Bhai for trusting me to structure this program. Yes, now I can take questions.
Sir, I will give questions to you. So if anyone have question, they can put it in question and answer session. So
There are
sir,
some
can I answer the
questions
question?
which are there in
Yes,
the
yes,
question
yes.
answer already.
But I think they have already, most of them must have been covered in your session. So any new questions are
So
there?
if there is something that is not covered, if Jayesh, you can help me with the questions, I would love to answer them immediately.
Yeah.
In
So,
case something is not
yes.
covered.
Yeah. So I will read one by one. First question is whether RCM is payable from unregistered person for 80% rules is applicable on following services: commission paid for purchase of TDR and indirect expenses, that is AMC for computer repairs.
Yes, both it will be applicable.
Okay.
80% rule will be applicable.
Yeah. So next question is, we know in JDA GST is to be paid on unsold inventory at the time of OC. If builder purchased land, whether GST is not to be paid on unsold inventory.
Correct.
Right.
I mean, if GST purchases the land, there's no question of JDA implication coming in.
So next question is, if developer builder paid amount against tenancy right to tenant, whether RCM is liable to be payable. In this case, if tenant receives flat in the same scheme free of cost, then RCM is payable and at what rate?
Sorry, I didn't get this question.
So developer and builder paid amount against tenancy right for tenant, and whether
Acha, this
will it
is
be
for
liable?
the redevelopment projects.
Yeah. So will it be liable for
Yes.
RCM? And if it is liable, then yes.
No, I don't think tenancy rights are covered. See, what is covered is development rights, not tenancy rights. I don't think RCM would be applicable on tenancy rights. See, it is on the transfer of development rights, not on the tenancy rights.
Okay. Next question, whether salary and electricity expenses on which no GST is applicable also to be taken at 80% calculation?
No, neither in numerator nor in denominator. कहीं भी मत लो उसको.
Okay. For project commenced after 1st April 19, is new scheme of no ITC, there will be no matter of reversal of ITC for sale of flat after obtaining completion certificate. For project commenced after 1st April 19, in new scheme of no ITC, without ITC, there will be no matter of reversal of ITC for sale of flat after obtaining completion certificate.
In the case of new scheme, because you will not taking the credit in the first place in the residential projects, because you're not taking the credit in the first place.
No, Ravi sir, in case of TDA development agreement, if we start scheme after 1st April 19 and on unsold inventory, we have to pay tax on that, na?
Yes, sir, that tax needs to be paid. What is being asked is that whether ITC reversal as per that rule 42, whether it is required.
ITC is
That
not
is not
reversal.
required, sir, because
It is not required.
that is not there. That's what the point question was.
Whether post-completion certificate ITC is available on commercial projects?
Yes, it is available. You need to do the calculation as per the carpet area. If in fact, there will be always be some expenditure which will be after completion. तो ऐसा नहीं है कि completion के बाद में ITC नहीं मिलेगा. Ultimately, you need to do the complete calculation for the entire project. Based on the project calculation, you need to arrive at the ITC, whichever is there, and that ITC would be the eligible. You can utilize that against the same project or any other project. So there is nothing, nowhere in the law it is mentioned that post completion there will not be eligibility of ITC.
Okay. Next question. In case of 80-20 ratio working, whether GST amount paid on input and input services to be included or not to calculate the ratio?
This is already
GST.
discussed, na? Input.
Yeah.
No, Ravi sir. Calculation should be with taxes or without taxes?
Acha. Okay. It has to be without tax only. Oh, sorry. Sorry. Yeah. This is another. This is actually another disputed area. In fact, this question came to me by one professional sometime back. कि सर वैसे भी टैक्स का तो कॉस्ट हो रहा है, उसका तो क्रेडिट मिल नहीं रहा है, तो ये 80-20 को हमको विथ टैक्स करना चाहिए विदाउट tax करना चाहिए? As of now, there is no clarity over there. I need to look into it to answer your query more specifically. I would not be in the position to answer as of now.
Yeah, in my opinion, sir, it should be as per taxable value. So we have to exclude GST amount to calculate 80-20.
Ideally, that should be the case.
As per the valuation.
Correct.
Okay. So
Because
next
tax
question.
is
Ankur is have the opinion that it should be with tax.
Yeah, that is actually वो एक बार थोड़ा law देखना पड़ेगा. We need to read between the words and understand that particular thing.
Sir, we have many expert attendees with us. Vishal Poddar sir is there. Ankur is there.
Oh wow, it is my privilege.
Yeah.
So I will go for next question. Interest on late reversal laws section 50 is amended to cover late filing of return. Situation of ITC availed but not utilized is not covered by amendment of law. Considering various High Court decisions, according to you, can recovery of interest under 73-74 be made?
No, I've already told. Only if you have utilized, you need to pay interest. Otherwise, no need.
Okay. Next question we have is in case of SRA or MADA projects, rent paid to tenant is considered in RCM 80-20 ratio or not?
Rent paid to tenant. See again, over there, it is an exempt. Rent is exempt because it is renting of immovable property against for residential use. Correct? So once it is exempt, it cannot be indirectly taxed, which I already talked about in the context of interest. Same analogy would apply here.
All right. So we have one more question. In case 80-20 scheme, whether the expenses incurred after completion of project need to be considered for calculation in particular year?
नहीं. वो completion तक ही करना है, बस.
Okay. So I think we have covered almost all.
Aditya, in a JDA, Aditya Falor having one question. In a JDA, the developer is selling his share of shops in a complex on long-term lease, one time of 60 years. Whether this will be liable for 18% as lease premium.
Developer is giving 60 years lease. Now again, that is another very big issue. Is if a particular apartment or flat or a unit is given for a long-term lease, under income tax, I understand there is a settled jurisprudence that is as good as sale. It is as good as sale. If it is treated as good as sale, for example, we had an opportunity of analyzing one project for a builder where it was 99 years lease. And we gave opinion that it is as good as sale and you will be eligible for the 1/3 land deduction and the rate of tax will be 12%. I think similar view is possible in this case.
I agree, sir. There is in case of service tax, there is a Delhi High Court judgment. Lease is a lease, whether it is a 1-year lease or 10-year or 100-year.
I think few people have raised their hands. I think we should give them also the opportunity.
We have one more question, sir. For project before 1st April 19, whether GST is payable on flats allotted to landowner under JDA. Completion certificate received on 31st December 20.
Sorry. The project commenced?
Project have started before April 19, but flats allotted to landowner under JDA and completion certificate received on December 20.
Okay.
So whether GST is payable on flats allotted to landowner.
See, GST is payable on the flat allotted to landowner. There is already, this is settled under service tax. LCS City Makers, Chennai Tribunal. the GST is payable on the flats allotted to the landowner. In your question, the only issue or the question that comes is the rate, value, and the timing at which the tax needs to be paid, which tomorrow Gabawala sir is going to cover in length on this particular topic.
Hello.
Yes, Pankaj sir.
Sir, good morning.
Good morning, sir.
Manish sir, thank you for calling such a wonderful speaker. Sir, Ravi sir, I have just one extended query regarding that tenancy right. Someone has asked regarding that tenancy right. I have that query ki agar suppose if I'm a builder, residential builder, and I am giving a tenancy consideration against a tenancy, acquiring a tenancy right. So now whether that will be covered under 80-20 ratio, for that I have to pay for under 80-20 ratio.
So this tenancy rights, the consideration is paid to the in the redevelopment
Tenants.
projects you're talking about, right, sir?
No, sir.
To the
Actually,
tenants.
I have one. Yeah, actually, I have some building that I have acquired along with those tenancy rights. And after that, I have vacated. I have asked those tenants to vacate the property, and against that, I am giving them some consideration. So now, whether for payment of that amount to those tenants, whether that will be covered under 80-20 ratio, because all of them are unregistered.
Only one aspect that we need to look at, Pankaj sir, over there is that see, one is development rights. Now you have asked the extended aspect from the RCM perspective. The earlier query was from the taxability perspective. Yeah. So this is, I think, in that exclusion, it not just covers development rights; it also covers lease premium. If I'm correct over there. So whether these tenancy rights can be said to be a lease premium is something needs to be analyzed, I would say. So I may not be able to give a conclusive answer to your query, Pankaj sir, as of now, but what I understand, it covers three things: transferable development rights, FSI, and lease premium. So tenancy rights, can it be called as a lease premium, is something where we need to analyze this aspect.
Okay. Thank you, sir.
We also have Rudra sir have some question. You can go, sir. I think he's not here. Sir, there is one more question. Tenancy right received for shop is taxable in hands of receiver or payable?
Tenancy rights. I'm not sure whether this is covered under reverse charge under 9.3. Ideally, it must be taxable in the hands of supplier only, because I don't think tenancy rights is covered under section 9.3 reverse charge as a specific reverse charge item.
Sir, just
so it must be taxable
in my
hands of
opinion,
supplier.
tenancy right as rightly not covered by the exemption, as like TDR and FSI, we have to covered under 80-20 ratio. If it is covered under 80-20, no RCM will be applicable. If the recipient of tenancy rights are registered with GST and having receipts less than 20 lakhs, no GST will be applicable. If the recipient of tenancy rights is registered with GST or having receipts above 20 lakhs, recipient has to pay GST on that, being it is a service.
Yes.
So, sir, one more question we have. Builder paid amount as development charges.
No, that is not taxable. That is not taxable. I've just read the question. See, these are all the permissions and sanctions for the safety safety purpose, which is exempted under the notification number 12, which I have already shown the notification. So all this fire NOC, drainage NOC will not be taxable in the reverse charge.
Okay. So
Sir,
we have almost
real estate is a vast, you can say, coverage, because all sections of GST law will be applicable, and we are covering all sections, all applicability to real estate in 3 sessions only, including structuring.
so, we are already running out of time. So we have Nilima Nagarkar ma'am with us. I would like to request Nilam ma'am to guide us on this aspect in 1 or 2 minutes, if possible, for her.
Thank you all. Actually, it's my privilege. So the session was really very good, very analytically placed, and actually issues of litigation as being posted as now DC appeals. The major cases before me are of builder and developers in GST. So
Rightly,
actually,
right.
still as a appellate authority also I am in dilemma whether it is to be allowed or whether it is not to be allowed, considering the various judgments of different high courts and advanced ruling authorities. So right now also what is the position in the market is the position of the officers also. So it is a very good initiative by you that the practical aspects, actually I want to highlight that the practical aspects which has been discussed here, they were really the what are the problems which are being faced by the builder people, and the actually what is the intention of the statute is a different issue, and what the officer think in that perspective. So there should be a homogeneous approach actually, but because of different circulars what or notifications which he has pointed out also. Yes, what as far as Maharashtra SGST is concerned and CGST circulars are concerned, we again get confused of what is to be correct position of law, and we are working on that right now. Also, I have started to look in the matters, appeal matters of builders right now after posting in the appeal for 7-8 months. Even I have not touched those cases because of such these dilemmas and some clarification required. But now because of this session, really it is enlightened, some issues are very well enlightened, and actually the authorities should go and should revisit these provisions and interpret accordingly, I think. So it will be because see what in statute also it is said that when there is no levy of tax, tax should not be levied. There should not be a stretched interpretations. So in the aspects which the speaker Ravi Kumar has said, really I'll go through that and what should be actual position, and will try to discuss with my senior authorities surely for that. Thank you.
Thanks a lot, madam, for your views. Ravi sir, can we share this PPT with the audience?
I have already shared it with the Pune branch web.
No, means can we upload on the website?
Absolutely, sir. Absolutely.
Friends, we will upload this PPT and yesterday's PPT on the Pune branch website. Also upload this video on the YouTube channel of Pune branch. Definitely, it was a great session, Ravi sir. I always need your support to host such programs for the benefit of members, and you have always supported me by all the ways. Thank you, Nilima madam, for joining this session. Actually, we work together, members, chartered accountant members and the department. म्हणजे आपण म्हणतो ना ही कडी आहे, आपण त्याला वेगळं नाही करू शकत. You can't separate it. So thank you, madam, for joining and guiding us. Thank you, Ishwar, for joining us as a MOC. Thanks, staff of Pune branch. Thanks, audience, for patiently hearing. Yes, Ravi sir, yes.
Yeah. Only, sorry, I just raised my hand to thank Nilima madam for her kind words. And most importantly, the fact that she mentioned that, yes, where there is anomaly, as an appellate authority, we need to look the entire thing judicially in the best interest of everyone. And this is one thing which I have actually seen in the state tax authorities as compared to central tax authorities, that they try to look at reading the law more judicially and what is fair. So we are really thankful for this kind remarks, madam. This would really boost confidence among the business when that such remark comes from you. Thanks for that.
Thank you very much, sir.
Ishwar, please, over to you. Please conclude the session.
Thank you, everyone. Thank you, Nilima ma'am, for such a positive approach and for giving your views and joining us this early morning from department to, there is always, we always need one person from department because they can help us to, enlighten us in further matter. And the but obvious Ravi Kumar session was, as usual, the best brainstorming session we can have on any GST matter, because he's expert and he guide us with so many case laws, so many notifications, and it helps everyone because GST on real estate specifically is very complicated matter. Thank you, Rajesh sir. Thank you, Pune branch, because for organizing such wonderful sessions, such wonderful seminars, and bringing such wonderful speakers, so we can help our fraternity to grow and practice beyond that. Thank you, everyone, for joining, and we would like to hear tomorrow's session, so we can meet tomorrow again. Thank you, everyone. Yes.
Thank you, Ravi sir.